Hello trading friends, it's that time of year for our annual Black Friday holiday sale. Annual membership, we're taking $100 off and we're throwing in any course of your choosing. We've got 20 spots available. We're gonna run this into Sunday or until it fills up. And you just click the link in the description of this video, enter the promo code BLACK, send us a message with which course you would like to have and we'll happily add that to your account. Look forward to seeing you in the chat room. Let's get to the technical analysis. Checking in on the market. So we had an interesting day today. The bulls keeping control pretty much throughout and closing strong yet again after yesterday was, in my opinion, one of the most bullish days that we've seen in probably a couple months because everybody had a green Marabozu and closed at the high of the day. But what stood out here, something to keep an eye on at the end of the day, before we get into our regular analysis, the last 5-10 minutes of trading was interesting in the sense that we had sell-offs on a lot of names. So this is QQQ just in a broader sense. The sell-off isn't as significant on QQQ, but you can see the volume and you can see the pullback right into the close. So that's there. And then you start going down the list of individual names. What did Apple do at the end of the day? Fell off a cliff. That is a massive drop right into the close. We dropped 1.5% and then saw a bounce right at the end. Again, volume is huge. We saw this on Microsoft. There's your end of the day. And there's a handful of names that this all happened on. On the flip side, you have names like Google that saw a little bit of a sell-off but closed higher. You got Twitter, bull move into the end of the day. So when I first saw that action and I saw that 10-minute move, I thought, ooh, is that a bearish indication? That's bear volume. That's a bear pullback. And I thought, well, that could easily be sector rotation. And then someone else posted that Google and Twitter and other tech names had the opposite scenario. So it could be intersector rotation, where there's profit taking in Apple and all these other names. And then we see those funds very quickly going into other names. So perhaps transitioning from a name like Apple that's been seeing blue sky breakout from 3 weeks and going into a name like Twitter, which is just now getting its bounce momentum and looking to head to an area with a lack of resistance. So pretty much moving from the leaders to the laggards is a potential of what we saw in the last 10 minutes there. But looking at SPY, we've got an hourly higher low established in the afternoon, and that was down at 313.46. We saw a pullback into the end of the day. We knew anything above the low of the day kept the hourly uptrend in control. 330 came around, and some guy somewhere flipped a switch that said, all right, market buy program, get going. And we just V-shaped it to a new all-time high into the close, and hourly uptrend remains intact. Bulls remain in complete control. Are we going to see a sell-off when if we get a phase one deal? In my opinion, that's a more likely scenario than not. I would not be surprised to see a short-term initial bullish reaction, even if that's only 2 hours or an hour, and then sell-off, a sell the news scenario. Because again, every time we get a news article that China had a phone call, that we're close to a phase one deal, we price in the phase one deal. So I would not be surprised if that is a potential indication, or I should say a igniter. That's the wrong word. But the reason for weekly consolidation could be the trade deal going through, the last hurrah for the bulls, and then some pullback. That's, of course, if we get anything concrete in the next week or two. Otherwise, we're just going to keep taking it one day at a time. IWM, little bit of a bearish reversal candlestick on the daily time frame after the huge day yesterday. Hourly chart still in an uptrend. If we break the low of today of 161.29, we zoom out to the daily and we look for a daily higher low to form anything above 157.23. QQQ, bull break, hourly, higher low established midday 204.42, bull move into the end of the day, and new all-time highs after hours. XLF, double bottom. Actually, we broke support, but only by 2 pennies. We rejected from resistance first thing. So I headed into today and wanted to know, are we going to say the same thing as yesterday as far as bull strength? And as soon as XLF pulled back from the high of yesterday and made it clear that we're not going to break that high anytime soon, we knew it wasn't going to be a big green day today because we didn't have XLF going in the same direction as the bulls. So we had XLF pulling back, we had QQQ at all-time highs, and the tech sector's strength outweighed the financial sector weakness, but it wasn't full steam ahead for the bulls across all sectors like it was yesterday. So XLF time frame, you could say we lost the hourly uptrend. If we are unable to break 30.15 tomorrow and lose 29.93 support, daily consolidation will be underway, and the bulls have to hold 29.52 to keep the daily higher low. XLV, hourly, uptrend. You could say we lost it. Let's see. Let's get rid of extended hours. You could say we lost it. I would need to really see a failure to break one, or make that 99.56 and then roll over and break 99 to see a clear change in that hourly trend. So pretty much the most important support is the later afternoon level that all these names hit before the end of the day bull move. XBI. So XBI pulled back. Hourly higher low was 91.76. I had a really good entry for a bearish play on XBI, entering LABD on this break of, where is it? Look at this base of support. And this is what I played off of. And maybe that's not what I played off. I played off, that was one to play off of. I missed that one, this base here that broke, and I played this one. I played 1920 breaking as my entry point into LABD, and I just rode it looking for any kind of weakness. We saw consolidation. I knew that the market bulls were just fine, so I wasn't sitting here thinking I was going to have a big day maker or anything, but ended up covering half of my position into the close as the bulls started to buy the dip, and then they bought the dip a lot more. So I do still have a partial position on LABD, but because I took partial profit, pretty much worst case scenario, I'm going to be looking at a small loss if we see a pretty solid higher open. Best case scenario would be bulls failing to break 92.51 and then breaking 91.76 tomorrow to then be in an hourly downtrend. So fairly low risk. I do have a bit of profit cushion. VIX dropping down, lowest price in 7 months now. Again, we can still drop down to single digits. We dropped into the 8s back in 2017. So we're not there yet, but there is no strength in the volatility index. Gold formed a higher low on the daily. Have we changed the 4-hour trend? No. So bulls, if they want to prove this to us, we need a 4-hour higher low and higher high to say, okay, our daily higher low is now established, and this is the bulls doing everything they can to fend off the weekly bear flag from confirming. It's a weekly bear flag. We headed down to that support, and we didn't break it. And if the bulls are going to give themselves a big sigh of relief, we have to see a hold of this level and a break of 1479 to change this daily trend and negate that weekly bear flag. If this bounce just gives us a little lower high and then we drop down, bears confirm that bear flag. Silver's doing the same thing. Silver has to break 1699 and new must hold level is 1681. Miners had a very strong day. Look at the end of the day here on miners, and let's look from 230 into the close on increasing bull volume. What did gold do from 230 into the close of the market day? Nowhere near as strong as that move. Was it going up? Yeah, but by less than $2, by less than $1 almost. So this move is specific to miners in terms of its magnitude, and you could say the market buying that kicked in at 330 helped a bit. That could be the case, but either way, we have a significant move today. We had a little hourly higher low, increasing bull volume to change the hourly trend. Daily higher low is set, and now we're going to be watching for a lower high compared to 2910 for a tightening range into early December. So low, high, higher low, and watching to see if we get a lower high compared to 2910. In my opinion, if gold is going to break that resistance, and if the bull miners are going to break this resistance, we're going to have to see some solid market weakness out of nowhere, which is possible, but let's keep an eye on this downtrend resistance line as well, which is approaching for that lower high. So we can also be watching the bear miners for a potential entry tomorrow as we look for a higher low. Anything above 720 is a higher low, so worth watching that support. Oil. So oil had another 15-minute equilibrium. High, low, lower high, higher low, bull break. This is not a bull break that I would play. Why not? Because look how extended the bulls were when they headed into that resistance. Way overextended. So I know that even if that level breaks, we're not going to get a whole lot of follow through. And that is why not all levels are created equal. If I'm going to make that trade, you know, if you ask me, are you going to enter if 59.39 breaks? My answer is it depends how it breaks. You know, if we see another lower high, another higher low, and then a bull break, it's a way different scenario than the one that ended up playing out with the bull break and then a lack of follow through because the bulls were already tired and extended. So bigger picture, daily uptrend or daily higher or low has been set at 57.19. And if the bulls are going to see continuation, they have to break 58.71. Natural gas, little bit of a bounce today, not that meaningful. Hourly trend still has not changed. Solid hourly bounce from the lows, but until we see really a 4-hour trend change, bulls don't prove anything to us, and we're just going to be looking for a lower high. Look how many 4-hour candles we had in a row to start this week. 11 candles in a row on the 4-hour chart with a lower high every candle, and that's still in play. Actually, we did break it by 0.2 of a penny, but obviously no follow through yet on that. And I'm not that interested in natural gas with this lack of clarity. The size of that turnaround and bear move this week is surprising, and it means take a step back because we had a nice higher low on the weekly. The bulls shifted and tried to head towards resistance, and then were smacked back down, and the monthly time frame isn't looking that great. So that's where we stand for the market as a whole. We'll check back in tomorrow. Have a good rest of your night. An hourly tightening range. APA. Whoa. What you want? APHA is a potential bear flag on the daily time frame. It's a weak bounce. If we break the lows of today on any names that look like bear flags, we are going to be looking to confirm those bear flags with lower lows. Bro. You're really messing with my flow.